Good afternoon, Dr. Nyarai. And as always, it's a pleasure joining you on this show. Um, and today we're going to do things a little bit differently to what we normally do. So we normally start with life coaching, and then we go into technology. We're going to switch things around. And like you said already, Dr. Nyarai, it's a surprise for someone today. Let's see if we can get a prize for someone who's listening today. That could be someone who is, who's going to share an interesting comment, an interesting question, maybe who's going to post a lot of hearts or likes. Maybe it's going to be someone who brought someone new to this show today. So, Dr. Nyarai, do me a favor. At the end of the show, please let me know who this person is. And maybe you can share their details with me at the end of the show. So, cool. So let's get into this. So today we're still talking about blockchain, but today we're just looking at a few examples of where this technology has been helpful or where it can be helpful in Africa from an African point of view. So you will understand that some things take a bit of time to get through to Africans. Sometimes it's regulation, sometimes it's all these things. But let's just look at a few examples, and then at the end we will look at sort of some of the disadvantages or the risk associated with some of these things. And one thing that I found particularly useful to Africa is the digital currency, which is obviously built on the blockchain technology. So my examples that I'm going to give today are mostly based on the digital currencies because this is where Africa has actually started using the blockchain technology. So it's not that there are no other examples, but it's just that in Africa, this is where we are starting to really make use of this technology. So number one, we spoke about a guy called Abalaji Odunjo. Obviously, this name sounds Nigerian, so he's obviously from Nigeria. And we say this guy is already using digital currency for his own advantage in his own business. And he says that he has grown his business using this technology and has also managed to reduce costs for associated with running his business. So how has he been able to do this? He's been able to do this by protecting his business from currency devaluation. Now, if you're from Africa like myself, you will understand, and Nigerians will also understand that at some point there was a currency devaluation through the economic program that they called ESAP, Economic Structural Adjustment Programs, and Zimbabwe also went through that sort of same challenge. And for Nigeria specifically, even though they have even though they are very rich in oil and all these things, the currency is still highly devaluated. And this guy says he's been able to shield his business from this devaluation that happens in Nigeria because he is now using the digital currency to buy directly from overseas and to pay for his suppliers. He's also receiving digital currencies for his business payments. So that's the first thing that I was able to do. Now he doesn't. Secondly, he doesn't have to buy US dollars when he is transacting. So if he wants to buy something overseas, he doesn't have to buy dollars. He can just use whatever he's been receiving as digital currency, in this case Bitcoin, and he pays to his supplier. So ultimately, he's been able to reduce his fees as well. Because there's no intermediary involved. He's just paying directly to his suppliers, and his customers are also paying directly to him. And I think this is something that many of us can actually make use of and benefit from. Because from listening to some people that have been talking on this show and looking at what people are doing on Facebook and Facebook Market, I see that people are buying clothes and shoes and other things from overseas. So if we can make use of this digital currency and Bitcoin or other digital currency platforms, then we can also benefit as this guy from Nigeria has done in his business. So that's the first example. The second example, and Dr. Nyarai, I'm going to ask you at a later stage to jump in, but the second example is that on a monthly basis, digital currency transfers from Africa for amounts less than 10,000, less than or equal to 10,000 have actually gone up. So that's payments being made by individuals and payments being made by small businesses. They've jumped up by more than 55% to $316 million in June 2020. So that tells me that this is sort of where we are going, the digital currency sort of way of transacting, sending money home, sending money overseas, getting money from overseas, from those relatives of ours that are working in the diaspora. The third advantage or use is that, in some other African countries, Zimbabwe, for example, it can be very difficult for one to get access to, to other hard currencies, your rand, your dollars, your pula, etc. Unless if you go through the informal channels. So if you're making use of these platforms, digital currency, this is not going to be a problem for you. And obviously, you're going to increase profits in your business because you're going to do things quicker. You don't have to wait to get dollars. You don't have to wait for you to get the currency for you to transact. And people working in the diaspora are now going also to be able to hang on to their hard-earned income because they're able to reduce transaction fees. For example, normally you would pay up to 5% transaction fees, but using digital currencies, you're going to be paying 2% or 2.5%. That's essentially keeping money in our pockets. Number 5, Dr. Nyarai, you have used the platform called Luno in the past, or you're probably still using it to send money to your daughter in Cyprus. And I think you sort of touched on this on Wednesday, but just to maybe recap, how have you benefited from using this platform? What has been your experience, maybe as opposed to your traditional way of sending money overseas? Mm-hmm. 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 For the receiving end, yes. Mm. Mm-hmm. Cost. So thank you for that, and that's such a powerful example because, you ultimately get rid of the intermediary. In this case, in your example, the bank, because one, they're going to slow down the process, but not just only that, they're going to charge you for it. So I know, for example, that I did a fundraising at some point, and I got money from the US. I was charged by the platform that was allowing me to raise the money, and then I was also charged by the bank when the money eventually came in. So I didn't end up actually, even though the platform said I raised so much money for the charity that I was doing, I got less of that. And ultimately, the people, the beneficiaries that I was going to give these charity funds to, ultimately got less than what they should have received because the majority of the money had gone to fees, to the platform overseas and to the bank that was receiving the funds here in South Africa. Now, the last example is using these digital currencies. We can also be able to, those that are running their own businesses, we can now also be able to get paid on our invoices using Bitcoin or other digital currencies. I know, for example, a lot of businesses that are already doing this, that are receiving payments for their invoices in digital currencies. And this is something that I'm personally also for my business exploring. But we will look at the sort of downside of it, the potential risks associated with digital currencies. Right. And if you want to know about other examples, real life examples of where blockchain and digital currencies technologies are being used, please, I'll share the links. There is one article that's called 20 real world uses of blockchain technology, or 17 uses of blockchain that are transforming society. I think I'm going to paste these links in the chat. for those that want to do further reading on this subject. Right. So, but there can be other few examples that I think Africa can benefit from this. So, number one, we have already talked about it: payment and processing of money transfers between peer-to-peer or between businesses, or I mean, from one African country to another African country, or from an African country to another country in the diaspora, I mean, overseas. Secondly, there's the retail loyalty programs that most shops are already making use of. And if you think about it, the loyalty program is already built on a digital sort of concept, a digital platform. You don't really get physical loyalty points. They are stored somewhere online, and then you go and you exchange them for cash and etc. So this is an example where blockchain technology can immediately come in and make things better in these loyalty programs. Then there's the digital voting. I mentioned this sometime when we introduced the concept of blockchain technology, where if we were to use digital voting based on the blockchain technology, then in an African context, this concept of rigging, vote stealing will be a thing of the past. These are just some of the examples that I think Africa can benefit from in the near future. Now, looking at the risk or the challenges, most Bitcoin or digital currencies are not regulated currently in most African countries. And what this means is that you will have little or no recourse if anything goes wrong. So there's a potential that you can lose money. Say, for example, some people in Zimbabwe will understand this example. There is that example of EcoCash, where the government just woke up one day and said, well, no more EcoCash. We're shutting down EcoCash. And I don't know what happened to the people that had balances in the EcoCash accounts. But same thing could happen with digital currencies. The governments can wake up and say, well, we're not recognizing digital currencies anymore. We don't want to regulate them, or we're closing all these accounts. Then there is, I think, an example that I saw in the news last week about a company called MTI, which is being accused of running a Ponzi scheme. What they did is they collected about 4 million rands in fees. In funds from people, but they have been able to pay the funders of the business about 306 million, which doesn't really make sense. And what's even worse is that some people have been able to get access to the data of this MTI company, and they've just dumped it somewhere on the internet. And they say they did it without even using any sophisticated hacking platforms or systems or processes, because the security that was used on this MTI website was not even secure. So if you're listening to me and you have your money in MTI, please ask for your money back. Right. Conversion of local currencies into Bitcoin and other digital currencies relies on informal brokers. That's also another risk. So again, prices can fluctuate, and again, the digital currency is like any other financial asset. The price can go up and down, and if you don't know what you're doing, you could end up losing money using these digital currencies. The last one is that the revenue collector, in our example, because we're in South Africa, might be interested in these things, in the digital currencies. And I've seen on some tax returns or letters that they send for taxpayers to verify their income and capital gains, they are starting to ask, well, actually it's been a while, they're asking about these digital currencies. So they want to know if you're trading with digital currencies. In other words, are you running it as a profit trade? So are you making sort of a speculative trading with this and making profit out of it, in which case you would need to include them on a tax return as your taxable income, your gross income, the money that you're earning in that particular year? Or are you holding them because you expecting an appreciation in value over time, in which case if you generate a capital gain, then that could be a capital gain on your tax return. So even though the Reserve Bank has not formally adopted digital currencies, SARS is taxing these digital currencies, whether you're trading or whether you're holding them for gain. Just the same way as they would tax you on ill-gotten gains, whether you steal money or what. SARS doesn't care about that; they still want a share of it. All right. So that's the final example on it. So we're now getting into our life coaching segment, and what we're talking about here is the concept of enablers, wealth enablers. Most of you have heard about this term enablers in various contexts. Right, the first time I sort of started thinking about this word, someone was talking about political enablers. Those people that assist different regimes or political parties to achieve certain gains in their respective countries. But this is not what we're talking about today. We're talking about economic or wealth enablers. So what is an enabler? So I mean, by the way, we're still looking in the book that's called "Is Your Thinking Keeping You Poor? 58 Ways the Rich Think Differently." And please do buy this book. It's a really good book. You can find it on Amazon or on Takealot. So what is an enabler? An enabler is something that is capable of separating separating your personal time from your earnings. Right? Can I say that again? An enabler is a thing or things that help you to divorce your personal time from your earning. So starting to see your personal time and your earning as two different entities, right? And this is what it should be. This is a powerful statement because, as I often say, the goal for myself is to build a business that can run even when I'm sleeping or even when I'm in holiday, right? My business should continue as if I'm there, right? This is an objective for everyone that you should have in your mind. But for this to happen, you need enablers. And let's give a few examples of these enablers. Number one, people who work for you in your absence are enablers, right? Your employees. A website that sells and generates leads for you is an enabler, right? A social media campaign that runs on its own and is able to generate leads for your business is also an enabler. An online store that runs and executes sales even when you're sleeping is also an enabler. Number five, a machine that can produce things in your absence is also an enabler. And number six, and this is a very important one, do not forget this one. God is your number one enabler. Deuteronomy chapter 8, verse 18, it says, "But remember the Lord your God, for it is he who gives you strength to accumulate wealth." Now, if you remember the other times we spoke, we sort of looked at the difference between an asset and a liability, and we said an asset is something that puts money into your pocket, and a liability is something that takes money from your pocket. Right? So a liability is something that does the opposite. And if I remember correctly, we gave an examples and we said, and asked I asked you to think about whether your house or your job is your asset, and whether the car you're driving now is an asset to you. So here we can start to see from these examples that enablers qualify as assets. These are the things that put money into your pocket. And the more enablers that you have, the wealthier that you become. At this point, let me remind you again that a job is not an enabler or an asset. Why? Because a job does not give you the ability to separate your personal time from your earnings. When you're working, that's when you're generating your earnings. When you're off sick, if it's more than 3 days, you're probably not getting anything. If you are taking annual leave, maybe it will be paid for. But if you're taking extra days, that's not even paid for, because your job is directly linked to your earning. Now, having enablers is a good thing, but there are things that we need to do to get things right. Number one, you remember we spoke about strategic thinking in one of the shows, and we said, as a business owner, you need to take some time in your business to actually think about your business. So even if we're saying that you need the enablers. We are not saying walk away from your business. You still need to get this time to think about your business, to make sure that your processes, your strategies, and everything else in the business is running as intended. So you don't want to do this thing that people do. They set up a business and they think it's running well. They set up a social media campaign, it's running well, and they sort of just go and enjoy. By the time they come back, everything is crumbling down. You don't want to do that. You want to keep your enablers alive so that you keep money flowing to your pocket. All right. Number two, you need to spend time sharpening your tools. What you're doing right now is time that you're using to sharpen your tool, because you're listening to this event, you're listening to my presentation, and you're getting some insights to how you can run your business, to how you can run your life. So you're essentially sharpening your tool. And Abraham Lincoln once said, "Give me 6 hours to chop down a tree, and I'll spend the first 4 hours sharpening my axe." So this is very important, because you want to be in the best condition that you can be before you can do your thing. Number three, yes, you need to hire employees, because we said these are your enablers, but you must understand how your own processes work. You must also stay in touch with your employees, with the labor that is producing for you. You don't want to be out of touch with the issues. You don't want to be out of touch with the real issues that they face as people. Also remember that they are also human. They go through things. So do not just say, because you're working for me, leave your problems at the door. When you walk into my company, when you walk into my firm, I don't want to hear about your problems. Take care of your staff. They are your enablers. And once you don't take care of your enablers, your business suffers, your pocket also suffers. Yes, you can automate your processes, but you still need to know how these processes work. You still need to know if your processes are working perfectly fine. Is there room for you to to improve them? Is there something that your customers are complaining about? How can you improve them? So you need to know about all these things so that you keep your business going and you keep your enablers running. So in summary, what the expert here, the author of the book, is sharing with us is saying a poverty mindset says, I'll keep my head down and work. But a wealth mindset says, I will create enablers so that I can lift my head and think. Dr. Nyarai, this is the end of my presentation for today.